Hi, this is Jerry Sanchez. I'm a New Jersey-based multifamily investor, passive and active investor focusing on Southeast markets, particularly in North and South Carolina. And today I'm with Gonzalo Chernosky and Mark Wisey of Maple Capital. We're going to have a discussion on the role of asset management in multifamily. Mark, let's start off with a simple question. What is asset management in multifamily?
Great question, Jerry. The way that I always think about it is when you take over an asset, that's really when all the hard work begins. And that is the role of the asset managers on a particular property. So they're managing the business plan, basically overseeing the property manager as they go through and execute on the plan that you craft when you buy a property. So they're handling the day-to-day as property managers, and then you're overseeing them and in some ways guiding them along the path to executing on your goals for the property.
Yeah, one thing I will add to it, you've heard the expression, we're managing the managers. So we're the ones in charge of managing the property managers, because it really isn't going to be anyone else more vested in the property than the actual general partners of the syndication. That's where us as asset managers come in to make sure we're good stewards of the capital that we've raised during the acquisition of the property, and making sure that we hit, like Mark said, our business plan, making sure that we're kind of sticking to the value add strategy that we put in the beginning to kind of meet all those return metrics that we provided to the investors before them investing in the deal itself.
And Mark, you mentioned the management of the property manager. So, what does that entail? Is there typically weekly calls? Are there certain metrics that need to be met?
Yeah, it's a great question. I think there are two ways or two buckets that we divide asset management into. The way that we look at it is there's a financial side of asset management, and then there's a physical side of asset management. Pretty similar to the way that a lot of folks divide their due diligence when they're looking at a property. So the physical side is a lot of the improvements that you're making to the actual complex itself. And that comes with a whole host of kind of priorities and different team members that you're having to work with. And then there's the financial side, which is more managing the financial performance and making tactical decisions regarding leasing, marketing, what things you're going to put investment into. So it's more of the financial aspects of asset management.
Right. And Gonzalo, you also mentioned a little bit about both in the acquisition as well as managing while you own the property. Does asset management also play a role before you acquire the property, particularly due diligence?
Yeah, I mean, definitely the skills you've acquired, while operating other properties, definitely come in handy during the acquisition process. So specifically during the due diligence process, a lot of the things that you'd be applying to during the while you hold the property, things such as managing contractors and just making sure things are going to the construction schedule. These are all things that you're going to be using during your due diligence process in the beginning, while you start developing CapEx budgets and basically just managing your teams in order to get as much information as possible on the property that you're looking to purchase.
Excellent. And then, Mark, you talked a little bit more about the financial management versus the physical side. With the financial management, how much does the asset manager play a role with utilizing the property manager to understand, maybe how much things cost in a certain market? The management part of the budgets.
Yeah, I think the flow of information there is really vital, and that's why it's so important to have a quality property management partner that you can work with, and that they can provide you with really relevant and reliable data that you can use to manage the business plan. So some of the reports that we look at and that we get help us get insights into how the property is performing. And we use a lot of that data to come up with our KPIs, our key performance indicators. Those metrics tell us whether or not we're staying according to plan, or where we may be veering off the track, so to speak, and need to maybe change the course of the way that things are going.
Now, another question in terms of dealing with the property managers, is the asset manager also responsible for choosing the property manager?
I would say a good example for us is that we're in a market that we've kind of been in for a few years now. So we've selected a property manager, and we've kind have gone with that same property manager as we acquire additional properties, because it just makes sense to keep on using and keep on building upon that existing relationship with that property manager. So if we're looking at other properties to purchase in that same market that we're in, it just makes sense to use the same property manager. And it goes to this, and you say the same thing about vendors and everything. If you develop a good relationship with these people, it just makes sense to use them on other assets that you're looking to acquire, especially if you're in the same market.
I think too that it definitely is the role of the asset manager. I would say more accurately, it's really the role of the GPs when you're going into a deal to kind of know what operating partner you're going to work with. Are they in that market? Do they do the types of deals or types of assets? Do they manage the types of assets that you're looking to acquire? What about the quality of the tenant base? Are they very familiar with the tenant base? So those are all questions that you want to ask up front, really, and so that by the time you take over the asset, they're ready to go. They've got all of their people in place and they're taking over the asset and they know what to expect. So it's really important they have the conversation up front. And then the other thing is the asset manager, if they're seeing that things are not going as well as they'd hoped, or maybe the property manager is not performing as expected, then it's going to be their role to, say, call an audible and maybe look for other property management. We've done this before in the case where we feel that our needs aren't being met by the property manager. And that would be, kind of the role of the asset manager, is to oversee whether or not things are going well with the property manager, and you enjoy working with them. This is, after all, a very human business. We're on the phone with them, multiple times throughout the week. We have a weekly call with the property manager. So it's really important that you feel comfortable with them. And if you don't, then it's definitely the role of the asset manager to maybe switch directions there.
Okay, excellent.
Yeah, I would add to that is that it's always a tough thing to have that phone call, especially with a property manager that you feel like things are not going in the right way and in the right direction, things are not being executed correctly. Unfortunately, as the asset managers, you have to make that call to essentially fire that property manager. And again, you're always kind of thinking back to, are we protecting the capital of the investors that we brought onto this property? Does it make sense to keep that property manager? And if it doesn't, you just have to make that decision to let go of that property manager and try to find somebody else that can better execute on the business plan that we had, put together.
Great. So I want to take a little step back to the acquisition, before you take over a property, or even actually identifying a property. I know, Gonzalo, you mentioned as value add strategies. Marc, take us to like the underwriting, or when you're looking at a deal, at what point do you start to determine like, okay, this property is going to be a value add, or this property, we're going to just do a light, updates, or, what's the thought process of creating a business plan?
Yeah, that's a great question. Unfortunately, there's not a guidebook or a manual that can really tell you, okay, this property is going to be good for this level of value add. I think value add, we tend to kind of use it as kind of a broad stroke, black or white thing, but I think there are many different grayscales of value add. For example, our value add may not be, another investor's value add. They may have a much higher level of construction and capex that they're looking to do on the assets that they take over. So in terms of determining the value add, really the business plan, I think a lot of that comes down to your familiarity with the market. So looking at the area and the types of properties that are catering to the tenants in that area. And, you're really not trying to stick out. I mean, it's multifamily real estate investment is not an asset class or not an investment strategy where you want to be a pioneer, where you want to be the first doing something, because that comes with a whole host of risks. So really, your familiarity with the market and what tenants in that area are demanding will dictate and determine kind of what you can do at a particular property. There's no sense in going in and, adding granite countertops and smart, home features and things like that if the tenant base in that area really doesn't require it or, doesn't really value it. So a lot of it is determined by the competitive landscape in that market.
Excellent. So, once you determine what you're going to do with the property, how is it? Gonzalo, explain. I know you have a background in engineering, and explain how you're able to utilize and I guess reference your experiences once you're in there and getting down and doing the dirty work in terms of capex and managing projects.
Yeah, thanks. Yeah, Jerry. So my background is very related to this more on an engineering side, but I would say that one of the most important things that you're starting your value add strategy and trying to hit the ground running once you acquire the property is basically just having good relationships with contractors, making sure that you document everything on paper. And as you're going through the initial budget that you put together, it's going to change. Obviously, the preliminary CapEx budget that you've developed during your due diligence ends up changing most of the time, because as you own the property, as you continue operating the property, you're going to find out different needs that are needed, different, I would say, black swans that you find during the ownership that's going to require you to kind of pivot your CapEx budget slightly, but you still want to stay within track of the renovations. And as Mark mentioned, you don't want to over renovate a unit. That's one thing that I always try to teach kind of like newer real estate investors, is when they go into a property and they're very excited. I know I've been there. I'm very excited. You purchase a property and you want to do all these changes to the property. You want to go in there. You want to provide value to the tenant, but you got to be very careful. You don't want in there and over renovate an apartment, because there's certain rent limits that you can hit on that unit, and you just don't want to overspend on the renovation. So you got to keep it within your budget. And make sure you know the market is very important. Make sure you know your comparables and where your target rents fall within that range in your area.
Now, I know, the two of you as partners have worked together on multiple properties at this point. Kind of reflecting back at your experience, I'll start first with you, Mark, but, there's various ways of thinking. Sometimes people would say, when you're getting involved in multifamily, just go big. The kind of same work that goes into a 10 unit is what goes into a 30 unit or 40 unit. But, give me a little bit, I guess, reflecting back on your experience on what you feel is the difference between managing different types of sizes of properties.
Yeah, that's a really important question. It's something that we're constantly kind of seeing the value of scale. And in multifamily, a lot of people will try to steer you towards those bigger properties when you first start out. That wasn't the route that we went. We started off and really in the residential side, single family, duplex, kind of really small multifamily, and worked our way up with every kind of successive deal. So it took a little bit longer, but the benefit of that route versus just going big initially is that you kind of learn all the nuts and bolts, and you're able to kind of build your business iteratively, stepwise. So at each point, you're not taking on too much. And so for some people, that's going to be within their comfort zone. And I think that there's not really a correct way or a right way. I sort of think that it's up to the individual and whatever they're comfortable with. Whatever is going to get you to take action is going to be the size that you should start with. I mean, if you don't feel very comfortable making offers on a 100 unit, if you've never had any real estate experience before, and you're not working maybe with partners that operate in that domain, then you're never going to make offers. You're just not going to take the action necessary to get those deals. Nor are brokers probably going to give you the time of day, because you have no track record. And so I always think that, starting off wherever you're comfortable with, if you are starting off at the smaller end and working your way up, just understand that that's a longer journey. Or the other side of it is, if you're trying to go big initially, then really you should be trying to find a partner that's done it before, whose credibility that you can leverage with discussions with brokers and with their relationships with property managers and so on. So those would be the two routes I'd say individuals can kind of evaluate for themselves which one they feel more comfortable with. In terms of the benefits of going bigger in multifamily, as you go bigger, really the per unit costs should come down. You have a lot of fixed costs that are spread out over a number of different properties, and so it kind of benefits you as you go bigger. One of the things that we learned was, going from a 2-family to a 5-family is, there's incrementally, it's not like there are that many more things to do. Like you said, Jerry, it's pretty much the same process for a 5-unit as for a 2-unit, but you get the benefit that if one person moves out, you're only 20% vacant versus 50% in a duplex. So I would say those are some of the benefits. As you get bigger, you're going to be able to afford other vendors, better vendors, let's say, because they're going to be looking for the most work. The best vendors are going to be looking for, operators like ourselves who can keep them busy. So that's another benefit that you get of economies of scale. I would say another thing is, as you go bigger in property size, you can also afford things like an on-site leasing person, and you have an area for them. So, rather than having your PM wear multiple different hats, now you have somebody that's, directly there for leasing. Then you may be able to even afford an on-site maintenance tech. Whereas, at our scale right now, we're having to hire handymen and other vendors that will go to the property and go to multiple different properties throughout the day versus having somebody that's, really there designated as this is your property to manage. And that can bring about a whole bunch of benefits in terms of the speediness that you can react to situations in the property.
Excellent. And Gonzalo, I guess, similarly, what are your thoughts on, especially, dealing on some of the issues, a pipe burps on a 4-unit, it may cause the same issues as a larger property, but, what is your reference of experience on that?
Okay. Yeah. And since this is a call related to asset management, and I kind of think about it in my head as two different things. So if you're kind of like a beginner asset manager and you have very limited experience on all things related to managing a property and everything that comes with it, I would say if you're an asset manager and you're on a potential deal that you're the lead person with limited experience, I would say starting smaller. Going back to like, should you start small or bigger? I say you definitely need to kind of get your feet wet on smaller properties and learn the ropes, because a lot of the stuff that you're going to learn in there, even though it's a much smaller property, you're going to apply those to the much bigger properties. So I would say for me, and I kind of mentor other beginner people also, is that definitely starting smaller. There's a lot of benefits to that before you really start jumping into the bigger stuff where you're dealing with much larger problems, similar problems, but they're just on a larger scale. If you're an asset manager and you're on a team that may potentially, maybe there's a mentor on the team or somebody you can kind of go to for answering questions and they're part of the team, I would say it's much safer to go on bigger deals on that direction, because you have somebody to kind of fall back on. You have somebody there with experience that you can kind of lean on if it's something that you've never dealt with before, because you've never owned smaller properties. And then the question related to pipe bursting or issues related to two different properties, again, it's very similar issues, because duplex is going to have the same plumbing, electrical, mechanical type of systems as like a much larger complex, except the larger complex has multiples the size of it. Similar issues, but again, if you have an experience with an HVAC system going out in your duplex, it's the same HVAC system as in a 50-unit property. It's just that there's 50 of them and you have to kind of manage it a little bit better. So I would say having the knowledge and the experience on different types of systems, it makes you a better asset manager, is important to have when managing larger complexes, smaller complexes, all in general.
And just to add a bit to that, I think Gonzalo touched upon the fact that we have, generally speaking, we have kind of two hats that we wear. And we talked about earlier, the financial and the physical. So it's really important when you're looking to put together your team that you're putting together partnerships where maybe one individual has a really deep familiarity with kind of construction or the components that go into a house or an apartment building. And so that they can manage the contractors. If you don't have a GC, certainly when you're starting out, sometimes a general contractor could be too expensive for what you're looking to do. And so it may be on you as the asset manager to be able to manage those, the CapEx and so on. And so having somebody that's familiar with that stuff and oversees the vendors and is familiar with drawing up scopes of work and all this stuff, that's going to be key. And just as important as that is, you also need somebody that's maybe a little bit more comfortable with things like accounting and data analysis and things like that, so they can oversee a lot of the financial aspects. So you kind of got to make sure that your team is structured and has members that have familiarity with both of those aspects of the business.
Great. That's actually a perfect segue. I'll kind of kick that right back to you, Mark, to start it. But the different aspects of mass management and what are some of the organizational tools, right? Because now you have all this data, all this information, how do you and your team manage that? Simple, could be technology or Google Drives. Like I would love to hear some of the tips and ideas and ways that you guys manage it.
Yeah, that's a great question. I think we have the benefit of living in an age where we've got pretty much everything at at our a stroke of the finger. There, really, there are apps, so many apps that we can use to leverage ourselves and our time and make us more efficient than maybe years prior. So we live in a beautiful time in terms of managing projects, complex business plans, and some of the tech stack that we use encompasses tools like Dropbox. So you mentioned Google Drive there. Dropbox is obviously a competitor to them, but a lot of the same idea. So we store a lot of our documents and really organize all of our documents on Dropbox. We also give access to our property manager so that we can share a lot of the stuff that we're looking at. And so we leverage that in terms of having access to a database of all of our docs. Besides Dropbox, we also use WhatsApp to communicate. I know other GP teams will use things like Slack or text and things like that. WhatsApp has always worked for us in terms of being able to communicate effectively. We also use Asana for a lot of our, I would say, project management. So, there are a lot of different things going on, a lot of different moving parts when you're doing these business plans. And so, you got to make sure that you're keeping track of this stuff and making sure that stuff is getting done. And so we do that through Asana. It's a really easy system to use and just start up and plug and play. And it's also free, which is great when you're starting out in the asset management business. And so we use Asana to do track a lot of the to-dos, so to speak, and of the project.
Excellent. And Gonzalo, how about, as far as the walkthrough or the due diligence, some technology you may use? I know the first time I went through a large property, I was kind of overwhelmed because you're walking into someone's apartment. There's people there, and to keep yourself on track and organized as you're looking through your list. Like, what do you use in terms of lists and then organizing that data during a due diligence walk?
That's a good question, Jerry. There's Mark mentions quite a bit of technology out there. One of the quick things that that I probably found out maybe like a year ago, is making your own Google Sphere on properties, especially on the outside of it. And it's basically a download that you put on your phone. You Google in the App Store Google Sphere, and it allows you to kind of do one of those 360 street views, and you can do it anywhere on your property. So what I usually do is I'll do like all the sides of the property. And then that allows me to, then after I'm done with my due diligence, I go back to my office. I'm able to really like lock in on a lot of different things that I might have missed. Even with photos, if you take a lot of pictures, you always tend to miss a specific area that you're looking for. It always happens, right? So the Google Sphere actually has a 360 view. You're able to capture everything in that entire area, basically, that you're looking at. When you're doing your unit walkthroughs, Mark mentioned Dropbox. I have it installed on my phone, so I'm instantly dropping in photos as I'm taking them of the inside of the units that we're inspecting. So it already goes right in. It gets organized as you're doing the walkthrough. And then as far as for notes, we just do the old notepad with pencil, and we have a one sheet kind of questionnaire that we created, that we kind of walk in with the inspector. We kind of tag team with him, and we note down anything that we see of the inside of the units, things particularly related to really like conditions and issues that, especially on the asset management side, things that you're looking for renovations. On top of that information, you're also going to be getting that report from your inspector, because your inspector that you hire for your property, they're going to every single one of the units, and they're doing a much more detailed inspection of that unit. So with your information and his information, you should have a very good idea of like the inside condition of the unit, especially the different type of finishes. So to me, when I go in the unit, I always want to find out if it's a classic finish, meaning that it's never been touched. It was original. Then after classic, you have classic plus. So the difference between the two is maybe the owner went in there and just painted it, or maybe he just upgraded the flooring a little bit. And then after the classic plus is like you would have maybe like your more renovated units, which meaning the tenant went in there, which meaning the owner went in there and put in cabinetry and really changed it to be more of a modern finish inside the unit. So a lot to talk about there, but it's a good idea to really get as much information as possible when you're doing these unit walkthroughs.
So you can see from Gonzalo and my response that the technology that you use is really a tool. It's not going to do the work for you, but it's really important that when you start in this business, you're constantly thinking, how can I be better? Or what are other tools that others that are more advanced than myself using? And kind of just follow the breadcrumbs there. There's no point in kind of reinventing things if these other groups out there, your peers and mentors and so on, have already figured it out in terms of, they've tried all the tech solutions. And so I would say that's a really good spot to start when you're starting out, is just, talk to other folks. Maybe if you have a mastermind, in your mastermind, as far as what tech tools that they're using, and then go along with that. And you'll figure out along the way what you work well with. We're still very much evolving. So, a year from now, we may be using a whole host of other technology solutions that we're not today. And some of those may replace the ones that we're using today. So I think it's a matter of, just like with any business, as you grow iteratively, asking yourself, is this solution still useful or still the most effective tool out there that I can use? And just constantly trying to refine your process and get better.
Excellent. So this next question is going to come from both. I'm going to put on both my investor hat and operator hat for the flow of information. Think of yourself. I know we both have all invested. Yeah, Maple's obviously a syndicator and operator, but then you may have individual investments where you are a passive investor. We get monthly letters or quarterly letters. How do you determine what information goes out to investors, and also what's your process in terms of frequency, in terms of reporting to investors once you take over a property?
Yeah, I can touch upon that, since that's kind of a hat that I wear for a lot of the deals that we do. So we put out monthly reporting, and we always strive to overshare in a sense. We understand that not everybody who's going to invest with us is going to read these. And in fact, many don't. So that's fine. But for the folks that do, these are not small sums of money. And so we want them to be comfortable with the experience and with understanding what's going on at the property, should they care. So we will cover a whole host of different items in those monthly updates. Things like what's going on in the local market. We find that, for a lot of people, they're investing out of state. They're not as familiar with some of the areas that we may be investing. And so we'll give them updates in those monthly updates. We'll give them kind of local news articles of what's going on in the area. Is there development going on? What awards is the city winning? Those kinds of things. We'll also have sections on KPIs, for example. So we'll have a number of different metrics that we're tracking as asset managers, and we'll provide those to our LPs. We also tell them, hey, what are we doing today, and then what's upcoming in terms of maybe the CapEx project and the business plan, so they know kind of what to expect in the upcoming months' updates. And then we'll usually have a section on financial performance, so that when it comes time to pay out distributions, they understand fully, this is how the property is doing. And also, one thing that we're looking to provide to LPs is, how are we operating, or how are we performing versus our budget? So, we'll typically go into these deals with an underwriting, an idea of how it might perform, a pro forma, and we'll compare how our actual performance is versus that pro forma. And I think that's a really important exercise, not just for our LPs to see whether or not we're, hitting our marks there, but also for us. If we're going in and we're making some assumptions and those assumptions aren't accurate, it's incumbent on us to be able to look at, okay, where did we veer off track, and where do we need to get back to our business plan? Or maybe this is an area where we need to focus, where we're not doing as well as we thought we would.
Excellent. So, we talked a lot about the asset management and the roles, and being prepared and getting ready, taking over property. And once you do it, metrics. Now, as we know, or not too many talk about some of the things that go wrong. You have 100-unit property, a 30-unit property. It's not going to all be roses and perfect. Gonzalo, give me, some stories of things that went bad, and, what was some of the procedures that were taking place to remedy situations.
Yeah, thanks, Jerry. So yeah, like as you mentioned, owning these type of properties with a lot of people living in these, you're gonna run into a gamut of different issues and things that pop up during ownership. Just a couple of ones that come in mind. that we've had to deal with fairly recently is that on a recent acquisition, unfortunately, there was a murder on our site, or shooting on our site. And that was something that we've never had to experience or deal with. And even our property manager never even really dealt with something like that. And it was just basically 2 weeks after the purchase of our property. So really, we had no control at all. We were just starting to kind of implement our asset management value add strategy, which is clean up the place and make it and improve for the lives of the people living there. So I would say that experience really was is something that we learned from, basically, as in lines of communication open with our property manager, making sure that we continue with what we were going to do anyways. But one of the things that we did kind of accelerate in the beginning is it was already part of our value add, which was increase the lighting surrounding our property and just make it a little bit safer, something we like to do to a lot of our properties. But for this one, we added the component of adding some security cameras, kind of to make the tenants feel a little bit safer at that property, especially after something like this happening. So we accelerated that value add strategy from like maybe doing it in the summer to immediately after the situation that occurred. Some of the things that we've learned, I would say, the last year or so is during the very out of the ordinary weather patterns. So the deep freeze that we recently just had that affected the target market that we're in is it caused a lot of issues with the freezing of water lines throughout many of our properties. So it was very nice to know that we've had kind of like a lot of vendors relationship that we were able to kind of lean on in the beginning, but we also did learn a lot of lessons there. One being just making sure that your vendors are working during the holidays, because obviously the things happen in the worst time. This happened, I believe, on New Year's Day, which a lot of vendors don't work on New Year's Day. So we just had to make sure that, I would say to the person that's operating their property, is to have a deep bench of vendors. That way, if the first or the second are not available, you're reaching out to maybe the third or fourth vendor on situations like that on days as like New Year's Day and Christmas Day. That's just a few examples, but there's so many others.
Yeah, and I guess, Mark, if you want to add to that or add another story or situation that you've dealt with.
Absolutely. Yeah. I mean, honestly, between Gonzalo and myself, we probably have enough stories to kind of fill up a few hours of, an audiobook. But I would say, there are tons of stories, but I think the underlying theme there is that you're not going to be able to plan for all of the eventualities. So like Gonzalo said, if you own multiple properties, multiple units, you're going to experience a little bit of everything. In our case, we look for B and C class value add, so very much middle income folks in our markets. And so you're going to kind of get a little bit of everything, but I think it's really up to you as the operator. This is where your opportunity is to shine. You're there basically on behalf of your investors to make sure that you're managing these situations. As I always kind of think about it, I had a prior boss in my W-2 life who kind of described it as, you get paid to have the hard conversations, to make the hard decisions. And so I think 80% of it is kind of reacting. 20% of it is probably planning up front, and it's really important. You obviously have to have a plan, but I think once you take over an asset, about 80% of it or so is pivoting and reacting and figuring out, how can you find solutions to things that pop up. There are always going to be surprises, and oftentimes the surprises aren't the things that you thought they would be. There are things entirely different than what you knew going into a deal. And so it's really important to just, meet those issues head on. You're going to work with your property manager and hopefully the rest of your team to find solutions. And hopefully they've got a really deep track record where they've seen this type of thing before and can kind of come up with, a game plan there. But everything that you go through, all the adversity, all the issues that you go through are going to become tools and ammo in your waist belt that you can kind of use as you encounter those issues going forward. So it's really important to look at that as all these things that happen to you as an asset manager, as a landlord, as an operator, they're opportunities for you to learn and grow. And so as you're going through them, sometimes it's really rough. Like Gonzalo mentioned, working with a plumber over the holidays, like literally, Christmas Day, New Year's Day, we've had these situations happen where you have to, take time away from the family, but that's what you're there for. And you're there to learn and maybe get better so that you can meet these obstacles as you face them in the future.
Yeah, and I think the key there is not ignoring the issue, and just and if you don't see a solution in the immediate horizon, just keep on pushing, keep on making phone calls to your network of people and get an answer. Because we had situations where we've haven't gotten answers in the few phone calls, but we as a team, we've gotten together. We've kept on reaching out to our network of people that we've built over all these years, and eventually you're going to find an answer and a solution to that situation that you're in right there. And it's important to just keep on pushing forward and making sure that you find your solution to that problem instead of just curling up in a corner and forgetting about it.
That's a really good point, Gonzalo, too. One of the benefits that we have, we're working in multifamily commercial real estate, and it's not, it's not tech, it's not some new sphere where we're going in and there's really no game plan or there's no blueprint. Everything that we're encountering, somebody has encountered before. And so that's why it's really important, like Gonzalo said, to really develop those relationships with other operators early on, so that when you encounter these things, you can kind of leverage the experience of your network to say, okay, this is how I would go about doing this type of thing. And so, not trying to, understanding, being humble enough to understand that you don't have all the answers sometimes is really important as well.
100%. Why reinvent the wheel in almost every situation someone else has gone through.
Yeah, if you don't have the answer, someone else does.